In this video, I am going to answer questions from my Patreon members. I'm going to talk about In this video, I am going to answer questions from my Patreon members. I'm going to talk about trading pre-revenue biotechs, trading William O'Neill style stocks with earnings versus stocks without earnings. I'm going to talk about 5-month trend templates. I'm just looking at my notes here. I'm going to talk about different types of gaps and how to trade gaps. I'm going to talk about the sort feature on stockcharts.com. I'm going to talk about low cheats. And then if there's still time, I'm going to just do a little analysis on a handful of symbols that my members wanted an overview of. And if you are interested in having me answer your questions, consider joining my Patreon. It's only $10 a month, and I do technical analysis of my portfolio and focus list every week and do some blog posts, etc. Before we launch into the Q&A session, 2 other things. 1, this is just my opinion. I have been investing since 1996, and I've learned a heck of a lot about what to do and what not to do. I've learned that the hard way over my years as an investor. But my opinion is not necessarily the right opinion, and it is not investing advice. It's just education, just entertainment. And 3rd, please consider checking out my partner, Seeking Alpha Premium, the #1 crowdsourced software platform, internet database for fundamental analysis on the web. Maybe I'll pull it up as we look at a few stock symbols. And with that, let's get to the questions. Okay, our first question is from Shane, who does the 𝐓-𝐸 podcast, a really cool podcast about detective novels and movies. You might want to check them out. And he said, an area where I struggle is earnings. I've come to this, my Patreon, from the world of William O'Neill, and I'm just watching IBD Live, and they're looking at NVIDIA's chart, but the earnings look terrible to me. I've always been strict about wanting a minimum 90/90 composite EPS. What is your approach to earnings? So, Shane, respectfully, I think you should throw that out the window. What you want to look for is relative strength. Instead of a 90 composite EPS, look for stocks that are 90 and higher in relative strength, actually 89. Because, sure, you can do the William O'Neill strategy, and that will get you into some really good, stable companies like, your Pepsis and your Home Depots until a few years ago, Apple, those type of stocks. I'm trying to think of other stocks with strong consecutive earnings. But you are going to miss out on the strongest stocks. The strongest stocks the last, say, 20 years or so have been stocks that are growing spectacularly with little or no income. Let me show you 2 examples. Perhaps you've heard of this company. This is Apple. This is Amazon. Here's the 20-year monthly chart. And Amazon did not start making money till 2015, right here. So it went from a low of 10 cents split adjusted to, where are we at here? About $25 without any earnings whatsoever. You missed the majority, well, maybe not the majority, but you missed a huge piece of the move. You would have missed a huge piece of the move if you'd waited for it to have consecutive double-digit increases of earnings, stable earnings growth. Another company, which I'm sure you are familiar with, is Tesla. Tesla was not profitable until 2021, I believe, was its first year of full profitability, way up here at 200. You would have missed this spectacular run from 14 to 140 as it was just turning from being profitable to from taking big losses to becoming profitable. So don't let that hinder you. Now, maybe what you do is you do a mix where you have a few steady, stable, old war horses in your stable. I guess I just said stable twice. But then also you have some high growth, low EPS stocks in your portfolio as well. Now, these have gotten beaten down in 2022, but they're going to do really well again as soon as the bull market starts. And it is starting this summer. Okay, now let's look at NVIDIA. You were thinking about buying it, but the earnings looked terrible. Went up 24% today, the biggest gap up by market cap in history. So one thing you need to look at is not whether the company is profitable or not, but how much the losses are shrinking. If you look at the last 4 quarters, negative 51 EPS, negative 50, negative 33, negative 20. So it has a good trend going, even though it wasn't profitable during 2022 and the first half of 2023. And then lastly, you know what's more important than past performance? You guessed it, future performance. So when a company posts its earnings, what is the most important is their future guidance, how they say the company's going to do in the future. If the company does fantastic, it matters, but it doesn't matter as much how well the company did as what their guidance is. The company can do fantastic, but if they say their growth is going to slow way down the next quarter, the stock is going to tank, and vice versa. They can have a terrible quarter, but if they say the company's going to do much better the following quarter in the future, the stock can make a big move. Let's move on to the next question. This is a question from my internet friend, William Sanchez. Check him out on Twitter. And this was from a private message in Twitter. He said, would you buy this stock based solely on its position on the chart, disregarding sales and earnings? I'm aware that Mark Minervini, 2-time U.S. investing champ, has purchased biotech companies without considering their earnings or sales figures. In a word, yes, absolutely. The technical chart always trumps the fundamentals. And biotechs, if the chart's doing well, that's all you need to know. The fundamentals will take care of themselves. So many biotechs are trading just on future expectations, and they make their biggest moves before they make any money. Here's the Akero Therapeutics, AKRO. Look at this move. September, it was about 10. January 1st, it was 54, 5x, and it made no money during that time. It did not sell a single, widget or doodad, in this case, therapeutics. It's trading all on story. So the earnings and sales are secondary. Ideally, you want to find a stock that its chart is doing fantastic, and then you check the fundamentals and they are shooting the lights out too. Then you really might have a tiger by the tail. But you can make huge gains, like I said, on these stocks that don't have any revenue at all. Now, you got to be more careful. They certainly are more volatile. You got to be darn sure you know when earnings are being released, when product or trial announcements are coming out, and you need to de-risk, have a stop in place, sell some stock at a profit going into those announcements, and or drastically reduce your position if you don't have a profit going into those announcements. You need to be really careful. But there's a phenomenal opportunity. And like I said in my previous example, you really want to mix. You want some stability with the SPY or the QQQ, and then you want a few stable old war horses, stalwarts, what Minervini calls them, and then you want a few stocks that can really be home runs. And a lot of these home runs are companies that are losing money and or pre-revenue, But you don't buy stocks whose charts are going down. You buy the ones whose charts are going up. All right, Dahl asks, how and when did you decide to become a full-time investor? Dahl, honestly, I am still trying to get there. I have made a lot of money over the decades investing, but I have had two really big financial setbacks that have kept me from achieving my goal. I have a wonderful girlfriend now. I really think she's a keeper. Don't tell me I just compared her to, what is that, a fishing term? But yeah, I think she's a keeper. But I unfortunately went through not one, but 2 divorces, and the division of assets associated with that has pushed my goal back many years farther than I had hoped. That being said, I really plan on going full-time a year from June or so. So in just about a year, really excited about that. In the meantime, I do have a job that allows me to monitor the market pretty much throughout the day. And the times when I am not able to monitor the market, I've got a whole bunch of alerts on my phone. Alerts me when stocks are going up and down, and sometimes it sounds my phone is going off like I don't know, light bulbs on a Christmas tree, and that's how I monitor the market when I'm away from the market. So yeah, hoping to be a full-time investor in June of 2024. All right, Leah Ann asked, I noticed on stock charts you can view list as summary, then sort by plus or minus column to find the volume movers. Do you do this? Yeah, that's one of the best functions. If you might consider joining stockcharts.com, it's not that expensive. Gosh, I can't remember, maybe $20 a month or something. And they have these beautiful charts. I don't know, let me just show you. They got some really beautiful charts that I use, that I show my Patreon members. But you can also do this summary, and it's really great. You can have a portfolio of up to 1,000 stocks, and you can sort by volume, and that will show you which stocks move the biggest by volume. Now the indexes are listed first, but then as you can see, Palantir had a big volume day, and it also was up quite a bit. So now we can pull up Palantir, and you can see how the volume is spiking. So you can definitely sort it by volume and look for stocks breaking out on big volume, which would indicate institutions piling in. And you also can just sort by price. So you click on percentage change, and you'll see Super Micro Systems 23. Why is NVIDIA not? Oh, here we go. NVIDIA 24.37. And that's a good way to find stocks that are breaking out. And also for stocks you want to short, stocks that are doing poorly on a big up day. And then maybe the best way to use it is on a big down day, sort it and see which stocks are performing strongly on a big down day, because those are showing what, resiliency. Here's another example of, so I did this sort by volume, and Nikola had huge volume today. It was right up here. I got like 1,000 stocks in this portfolio, and Nikola had one of the highest volumes, and it was down 20%. Oh no. Look at this huge volume spike. So that would tell you that something very bad is happening. This stock, it's really hard to borrow shares now. It's under $1. The time to short it probably was some months ago, but it's probably going out of business, or maybe it's going to get scooped up by another automotive company for pennies on the dollar. And another way you can sort these things in stock charts is by scooter ranking, SCTR. Gosh, I cannot remember what that acronym stands for, but basically it's relative strength, and you can sort it strongest to lowest, of course. Here's NVIDIA, A lot of these are biotechs. RXDX. Oh, it's getting acquired. See that? Whenever you see a stock flatline like that, that means it's getting acquired. You know what I'm going to do with that? I'm just going to delete it. And let's look at one more. Viking, VKTX 99.7. You can find some real gems this way. And of course the opposite, you can look for the lowest rankings. Yeah, 𝐓-𝐒𝐇𝐈�𝐓𝐒. This is a stock that we could potentially short. Oh, yeah, look at that. Falling off a precipice here. So Dahl asks, can you share your opinions about stock charts versus trading view? So I've talked a lot about stock charts. I think they have the most beautiful charts around. Their annotation features are easy, and there's a whole bunch of them, and oscillators and things, although I don't use any of those. There's some screening tools I just showed you, and you can make all these different portfolios. Let me show you this. It's pretty cool. Let's see, dashboard. So I've got this master list of like 995 charts, 254 in my Patreon. I don't show you guys all those. But then I've got all of these other portfolios, airlines, banks, automakers, Bitcoin, Chinese stocks, Dave Lee's portfolio, etc. ad nauseum. It's really an amazing service, and I just looked up the price. It's only for the basic package. It's only $15 a month. That's a That's a steal. And if you do want to subscribe to it, if you enter Joe's Investment Express, @gmail.com, no apostrophe there, I'll get a free month of membership, which would be pretty sweet. That'd be worth, I think I'm extra pro, I can't remember. Now, versus, what did you say, TradingView? I hate to tell you, doll, I've never used TradingView. I kind of find what works for me is stock charts, MarketSmith, and Minervini MPA. If you could only afford to subscribe to one of those, I'd probably just do stock charts because it's the cheapest and it has some really good features. I don't have any need for any other programs. I don't know. I can't answer your question. If any of you know are users of TradingView, pipe up in the comments below. Maybe it's fantastic and I don't even know it. PKJ, one of my longtime Patreons, wanted me to talk about gaps and how to trade them. All right, let's talk about this. So a gap occurs when the stock moves post-market and pre-market during extended hours, and then when the market opens, it opens at a different price. There's a few different types of gaps. Gap down is always bad. If it's a big gap, I usually sell on the gap. If it's a small gap, then it's a judgment call. So as far as gaps moving in the right direction, we have a breakout gap, which is a breakout out of a base. We have a continuation gap, which is a continuation of the trend. And we have a climax gap, which occurs at the end of the move. I'll talk about all three. Breakout gaps and climax gaps. Breakout gaps are easy to identify. The other two are trickier. So a breakout gap occurs, it's a breakout of a base. This is the NVIDIA 10-year chart. Here's a great example of a breakout gap. You have a base, we have a little VCP action, large, medium, small, breakout of the gap. Now this gap will fill, on average 50% of the time, but it depends on the strength of the general market. The stronger the general market is, the less likely the gap will fill. And then obviously it depends on the stock. Why is it gapping? So there's different ways you can play these gaps. Oh, let me talk about that in a minute. Then the next one is continuation gap, which continues a trend. Looking at this 10-year chart, I'm sure it's really hard to see unless you have a big screen. A continuation gap would have been right here. So you've got kind of an ascending base here. You've got, oh, this is kind of a faux base, and maybe we could call that breakout gap. But then this is a gap that continues the trend. These are hard to determine until hindsight. Is it a continuation of the trend, or is it making a climax run? A climax gap is just that a stock, after extending a long ways from a gap, makes a parabolic run, and then to make it an extended run from a base, makes a parabolic move and a final little gasp up, and then it gets exhausted. And right there, I don't know if you can see that as an example of a climax gap. So we want to sell climax gaps. Maybe we want to take some off when we have a continuation gap. Now, let's look at the NVIDIA gap. So there's a few things you can do. One, you can set a stop right at the low of that day's gap, and then you can play, 50% chance you don't get stopped out. You can set a stop. You can buy it the day of the gap and set it at the bottom of the gap itself rather than the bottom of the candle, if that is less than 10%. You can buy a partial position and then wait 5 to 10 days and see what happens. What you want to see is for it to go inside, stay really tight for 5 or 10 days. That tells us that sellers are reluctant, that people who are in the stock are reluctant to sell, and then a resumption of the trade, of the trend, or any combination thereof, right? So NVIDIA, this is such a big gap. If you're not in it right now, personally, I would probably wait 5 to 10 days and see, is it going to start drifting up, or is it going to drift down and fill some of this gap? Let's look at a couple other gaps real quick. Here's Intuitive Surgical, which gapped on earnings. So if we'd set a stop at the low of the gap candle, we would have gotten stopped out. If we had set it down here at the bottom of the gap itself, we would be in the stock. If we had waited 5 to 10 days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, this is a pretty good indication. If it hasn't gone down in 10 days, it's a pretty good indication that it is going to continue drifting upward, at least near term. So in this particular interest, I probably would have bought right here. If I wasn't already in, I probably would have bought right here at this nice hammer off the bottom, and then confirmation the next day, and we'd be in. So far, so good. I don't know what else to tell you, PKJ. The thing with gaps, you don't want to be trying to play them. You don't want to be asking yourself, what can I do now that this stock is gapped? You want to be in the stock before it gaps up. So ideally, you want to be playing these low cheats and cheats, especially in the big caps, so you have a profit going into earnings and you can hold through earnings and get some of these big gap ups, especially during the bull market. In a bear market, it's tricky because you get a lot of gap downs. All right, next question. And by the way, I'm so bad at marketing. If you do decide you want to subscribe to stockcharts.com, there's a link in the description, and then I'll have my referral email address in there. All right, let's see. Kevin asked, hi Joe, are these stocks pulled from MarketSmith scans? If so, which scans? So Kevin, I've got, I run the 5-month Minervini scan to find stocks that are firmly in stage 2 uptrends. 98% of stocks that made the biggest moves were in stage 2 uptrends for 4 or 5 months before they made the big moves. I run the Minervini 1-month scan to look for power plays. Sometimes I'll just do a relative strength scan and just look at the stocks in the mid to high 90s, and their strength compared to the general market. I run the code 33 scan on MarketSmith, which 3 consecutive increases of margins, revenue, and income. What else do I do? Minervini runs his scans and has, he's well connected, and he floats symbols every day onto his focus list. I look at those and I add some of those. Then I have a few people on Twitter whose ideas I sometimes poach, I guess, including 𝙒𝙗𝐵, who was a former U.S. investment champ. I do have a few videos on how to do those scans. If you do a search on my YouTube page, those will come up. Now, let's see. What was the next question? Yeah, okay. Leah Ann asked, are low cheats and cheats typically between the 200-day and the 50-day? Anecdotally, honestly, it just depends. Look at the long-term chart. Is the chart in a long-term uptrend? And if so, if it's making a base, chances are it's going to break to the upside. It's going to make a measured move right up, sideways up. And then you look for a spot to cheat, to get in, particularly with the big caps. The big caps have lots of eyeballs on them. Breakouts do not work as well as the small and mid caps. So you want to get in those earlier when everybody's not looking at them. Yeah, I would just do a little anecdotal survey here. If you look at Lily, so to play a low cheat, here's the downtrend. You wait for it to break the trend, retest, and then continue upwards. So this was above the 50-day and the 200-day. That's Lily. Suave, this was a beautiful cup, right? Here is our cheat. So here's your left side. Here's your break. Here's your retest. Here's your cheat. This one is above the 50-day, below the 200-day. And then there was one. 𝐼MVT. Here's a little cheat that I bought above the 200-day, above the 50-day. And ISRG. So here's your left side. Here's your break. Not much of a retest, but I suppose we could buy it right there. Above the 200-day, below the 50-day. So, yeah, it just depends. Let's see. Doll asks, which broker do you recommend? Would it change depending on your account size? I think you should go with one of the brokers that have been established for a long time. I've had E-Trade since 1996. It's now owned by JP Morgan, one of the most stable brokerage firms in the world. I've had great customer service with it, very few problems. I'm very comfortable with navigating the site. It also has a bunch of charting, and it's got a lot of different tools that I don't use because I use my other things, MarketSmith and so forth. So I guess what I'm trying to tell you, doll, is I would recommend E-Trade, but I don't have an experience using other ones. Would it change depending on your account size? When you have a truly big account size, you might want to have a couple brokerage firms. Minervini has 2, so that if one of them froze up, like if he was long a bunch of stocks and his brokerage froze and then there was a market crash, he could go to his other brokerage and short those same stocks and then balance things out, so to speak. In all my years since 1996, I don't remember E-Trade ever freezing for more than a couple minutes. But that's one thing you could do. I don't think it would change depending on account size. I would stay away from some of the new gimmicky trading platforms that have been around less than 5 years. Leah Ann wants to know about CCJ. Let's give someone else a chance for an HROW. We might get to one of those. Let's look at Mike Sacco. Miko, I think is his real name. And gosh, where the heck? Where are you from? I forgot. Norway or something like that? Sorry, Mike, I forgot. Some stocks I notice aren't on your list. You don't have to say your opinion on all of them. Pick some if there's something you like. PENN, VIST, 𝙭𝙬𝙬𝙀𝙬. Let's look at a couple of those. Okay, I'm not familiar with PENN, so let's look at that one first. Penumbra. So first I look at the 1-year chart. If the 1-year chart looks like garbage, then I don't even bother doing anything else. In this case, this definitely has potential. So then I pull it up on MarketSmith. It's a medical device company for the vascular system. That's a really hot niche right now, as you know. So that's good. Company's making money. 0.616, 1.57, 2.55, 2022 to 24. That's good. Last quarter's earnings were powerful. That's also good. Looking at the weekly, no dividend. Most biotechs don't offer a dividend. Let's jump out to the monthly. So we've got a really strong uptrend for 5 years or so. Crashed. All of the medical stocks just got hammered in 2022. Penumbra was no exception. So all in all, this looks promising. Now let's see if we can figure out a way to get into it. And by the way, you know that I'm partnered with Seeking Alpha Premium. So at this stage of the game, what I probably would do is get on Seeking Alpha Premium and skim a few of these articles and see why it's going up. Like, here's one that catches my eye. Penumbra, today's best medical equipment nearby, cap gain buy. So I could read a handful of these articles from these different analysts and see, one, why it's going up, two, why it might continue going up in the future. And I can click on these, and you can even just read the summary here, or you can read the articles. And then also on Seeking Alpha Premium, it's got all sorts of fundamental information here. We can look at valuation, the financials, dividend, rating summaries, etc., etc. So that's a fun tool. I use it sometimes before I get into a stock, or after I get in, then I study up and decide, am I going to just swing trade this for 10%, or am I going to try to hold this long term? Now, where to buy this, if we should buy this. Unfortunately, like many of the biotechs, this is really extended now. We've got a pretty ugly cup with handle here. And really our buy point was way back here in December of 22. And it is up, 190. Should we just measure that? So it is up like 50% from its last real base. So you're rolling the dice buying a stock this extended. It's kind of a bad habit. If, however, you love the fundamental story, then the obvious play is a bounce off the 50-day. You don't set a buy limit on the 50-day, but you wait for a bounce. So you buy it right here, you buy it at the end of the day off of this hammer, or the next day, etc. And now we wait for it to come back and bounce off the 50-day again. And that'll work until it doesn't. Some stocks will bounce off the 50-day literally for months and months and months. Sometimes 2 or 3 times, and then it breaks. That's my thought on PENN. Let's do one more. That was kind of fun. Okay, VIST. Okay, VIST. The initial chart, obviously in a strong uptrend, so that's good. So that means we can research it further. I kind of shudder when I see that it's an oil and gas company. I just have so much trouble with the commodities. They seem to be more volatile, and I just get into them late. By the time I see these trends happening, I usually get in at the end of the trend. Oil prices seem to be lagging now. Here, let's pull those up real quick. Yeah, here's Brent crude oil. And it has been in a downtrend for really a year or so. That's ultimately, these stocks rely on oil prices, so that's not a good trend. But we can't argue that VIST is in an uptrend. Let's just dig a little bit deeper here. Pull it up on MarketSmith monthly. So Oil stocks tend to be cyclical. This doesn't look very cyclical. This looks like a breakout of a primary base, and it's been off to the races ever since. Here's your primary base. Nice little handle. Here's your buy point right here at 7, although I don't like to buy stocks under $12 usually. Low price stocks tend to be way more volatile, and I like to do 5% stops on average, so I almost always get bucked off the horse when I try these low price stocks. Let's see. It's making good money. $3 a share, 4.4, $5 a share, and 24. Big numbers. It's a Mexico-based oil and gas company. What else do we want to say? No dividend. By the way, the top relative strength in the group is Woodside Energy, WDS. Those will be fun to dive into. We don't have time to do that. And then if I wanted to further my research, I would jump on Seeking Alpha Premium here and take a look at some of these articles. Vista Energy still undervalued. That's good. Vista Energy still at attractive levels. That's good. Still an opportunity despite recent appreciation. And we could obviously read some of these. If we wanted to get into this thing, so like I said, you're just late to the party. Hopefully you're already in it. If you're in it, by all means, yeah, stay in it. Otherwise, honestly, the spot to get in would have been right here or right here. The beginning of 2023, it's extended. It's up over 100% from its last really good base. We want to get in on bases on cheats or breakouts. But you could do the same thing as the other stock that we were just talking about. See how it has a tendency to bounce off of the 50-day. Now, every stock has a different personality. Some stocks bounce around the 50-day instead of exactly on the 50-day, and this is one such company. So you got a little VCP action, large, medium, small. You could either wait for it to break out above 22, or you could wait for it to bounce off of the 50-day again and buy it there. Do a tight stop and hope that the trend continues. The trend is your friend till it ends, right? Okay, Caleb wants to know about COCO. I'd like your take on COCO. I got in May 16th with that outside bar peak above the range. All right, let's look at that. Okay, so Caleb got in May 16th. Yeah, when it just poked its head out above. This is called a pivot, a multi-day pivot point. Let's see, 522 saw a big sell-off. That must be this right here. Big holder sold a bunch of their stake. Yeah, that wasn't your Aunt Nancy deciding to sell her shares, was it? It was then bought back aggressively, big volume, and then had a nice breakout. I'm considering getting back on board. The buying off the 50-day institutions seems like it to my amateur eyes. Well, we're all amateurs, right? Even Minervini, who's been trading for 40 years, says that he makes mistakes all the time. We just want to pivot quickly when we make mistakes, right? Maximize our good decisions. Anyway, so what we have going on here, this is another one. You're just, what does this stock do? You're late to the party. Oh yeah, this is the one. It's like a health food drink, coconut oil and milk energy drink. Energy drinks are hot. Monster's doing well. Celsius is doing well. It's a new IPO. Here's your IPO base, kind of a quasi double. Double bottom. Company's making money, no dividend. What else can we say about this thing? So we're really late to the party. Here is a really good looking base. You got a left side, you got a vicious shakeout down here at the bottom, and then you got your right side. Here's a great cheat to buy, low cheat right here. Here's a handle that the train failed to leave the station, but you could have bought the bounce off the 50-day, or any of these all of these little wicks look like a breakout when they were happening. So you could get in right there. Now look, you're way extended here. This would be a great stock to be in right now. I personally would not enter right now. You want to see a multi-month base form first. Still, if you love this story, if you love this coconut milk or whatever the heck it is, you could try buying a bounce off the 50 days, just like these deep-pocketed, I don't know if they're hedge funds, institutions, whatever, are doing. Certainly it's extended right now. You'd be crazy to buy right now. So you bought right here. It was just really extended. See how far above the 50-day it was when you bought. And that's just a really short base. You were really rolling the dice. And hopefully you didn't get stopped out here when it pulled back swiftly. Those are my thoughts on COCO. Okay, let's just do one more, then I gotta get out of here. I got some stuff to do, and I need to make my Patreon video this weekend too. Palantir. Gosh, Palantir was had such a wicked crash in 2022. Anyway, Tony, I was eyeing this at 7, but cannot understand why it had underperformed since the recent move up at the time. Now back to the races again, but for how long? Go figure. Let's look at, this is one of the more popular stocks in the market, Palantir. Palantir burst on the scene in 2020, was one of the COVID darlings, blasted off into the stratosphere, had a climax top, kind of a head and shoulders top, right? Shoulder, head, shoulder, broke wickedly, lost like, I don't know, 80, 90, 70% of its value. And now, as you can see, it's coming back. It is making money. That's good. No dividend. Numbers are decent. It does this cloak and dagger stuff. Software for institutions to protect privacy, prevent the misuse of information. And I think the government, the military's using it or something too. I don't know a heck of a whole lot about it. Now let's look at it. The stockcharts.com charts are so much more attractive, in my opinion, as you know. So let's pull it up here. So what we're looking at now is a really early turn. This probably has started the right side of the base, but this base is so deep. Now these trap buyers are a couple years back, but some of them are still hanging on. Some of them are undoubtedly going to unload. And so you have two problems. These guys are going to sell as they get closer to their purchase price. And these swing traders that bought down here at 6 and 7, they're looking at a fat gain and they're going to unload too, which is going to lead to some steep pullbacks and volatility. You were looking at it at 7, maybe right around here. And then you were wondering why it didn't just take off then. Probably because of this immediate supply. Here's some immediate trap buyers. Here's some immediate trap buyers. So this is called an early turn. The 200-day is just starting to turn up. Now, if it's not a power play, you want this to be turned up for at least 4 months, preferably 5. But guess what? 7 to 14 is roughly a power play. So now what we can do, wait for this thing to top. Don't buy it. Well, you guys do what you want, but you would be crazy to buy it when it goes up 100% in 1 month. Wait for it to top out, which it may have done today, and then wait for it to make a flag for 10 to 20 days, and then you buy the breakout of the flag. Big buy volume, that's good. Let me show you an example of a power play. Okay, so this is what we want to look. This is what we want it to do. Pretend this is Palantir. You've had this huge move. That's called your flagpole. Well, here, I don't know. Let's just look. Okay, so here's your flagpole. And then you want it to make a flag. 10 to 20 days. And you want it to be tight. You want it to give back less than 25%. And then you draw in your little flag. When it breaks out of the flag, which would have been right here, then that's where you buy. Set a tight stop right there. Maybe add more right here, and away you go. Power plays can be very powerful. Palantir might be making a power play. In fact, let's put this on my on deck list on my Patreon portfolio. Alright guys, that's it for me, guys and gals. That's it for me. Let me know your comments below. If you're a Patreon member, I'm going to try to get out my video Saturday or Sunday. Monday the market's closed, maybe not even till Monday. We'll see. I'll get it out as soon as I can. Like the video if you haven't. Check out Seeking Alpha Premium if you haven't. Thanks for listening in. Excited. This is really an exciting time in the market. Not an easy time, but an exciting time. Take care, everybody.